Hello there everybody, welcome to the weekend video from bullwaves.org, and thanks for being with me during the week. Hope you've had a good one. It's early Friday, I know that. It's actually only 3 o'clock here, or coming up to 3 o'clock. So the market has a lot to do in the US before the day is out. I'm trying to get in early because just because. Sometimes life just gives you a few moments when you can pull things off, so this is when I'm going to do it. As usual, I'm going to go over the markets from the 4-hour down to the hourly and see what has happened this week and see what we can kind of glean for next week. It's been a frustrating week, I have to say that. I was expecting a turn this week, but it didn't happen. I still expect a turn, but you know, I'm being forced to be more patient than I'm usually capable of. But for now, nothing has really changed. I'm mostly talking about, across the board really, nothing has really changed. But we have some kind of slight alterations in certain corrections that are happening right now. Okay, so let's get into the FX market first. And again, here is euro dollar. We are on the 4-hour chart, and we've got this nice impulse pattern. Pretty much done. We got a nice sell-off this week off the upper trend line of the wave 2 high. So I'm expecting that has confirmed the fact that this is a leading diagonal wave 1 and a bloody mess of a wave 2. That's a technical term there. So I think we're working on, you see here we have a larger degree wave 1 and 2. So you can see that on the daily chart. So we've got a 1-2, 1-2 pattern, and we may be working on a lower degree 1-2 around this previous wave 2 high. So the idea from here is to close out that 5 waves down and to look for a counter trend 3-wave rally to give us a bearish impulse wave off that wave 2 high, which should, in theory is always great, which should in theory give you an impulse wave, a corrective lower high. It kind of lowers the risk, and you should be aiming to kind of aim with a break of that inner B wave there. So let's kind of get down into the hourly chart to see if we can make some sense of that. Okay, so let's get to the hourly chart, and let's get rid of those scribbles. So you can see the count has changed a little this morning. This extended kind of sideways action. It's either a triangle, or a triangle wave 4, or it's I had been expecting wave 3 of 1 to kind of pop to a new low, or drop to a new low at the trend line again, but that hasn't happened. I think we may have seen the low of wave 3 here, and now we're working on some sort of again, it's a corrective pattern. It may develop into a triangle, but it could also be viewed as a running flat maybe. You can see here internally, if I get in one more, we have an initial move up, maybe an ABC 3-wave pattern down, and maybe some sort of 3-wave pattern up again into that upper trend line there. We're kind of holding those lows, or those interim lows, those higher lows, or sorry, lower lows for the moment. So we're kind of still working on an impulse wave to the downside. I think one more drop towards that lower trend line there, towards support, would give us 5 waves down. At that point then we would look for 3 waves up. You know, that previous 4th wave then would act as resistance, as a kind of initial target for that retracement in wave 2, and then this would be the previous B wave. So you'd look for a break of that B wave to confirm maybe a move down into the next leg down in wave 3. And there is the theory. And theory always sounds fantastic, doesn't it? But making it work is another thing altogether. Okay, so we're still working on 5 waves down. Next week, we want to see that 3-wave pattern. Well, first we want to see that break to a new low, hopefully today. We have an initial move down off the open in the US, so let's see if that continues to create 5 waves down, and then next week we were looking for 3 waves up. And that is the outlook for euro dollar. So again, it would be a continued kind of range contraction, really, with the intent of creating an impulse wave to the downside. Okay. Let's get to pound dollar, and pound dollar broke to a new high this week. And I still think this is probably maybe a triple combination, or double combination. Probably double combination, let's say. Wave 2, and just like euro dollar, we'd be expecting to move down into a 3rd wave. And for now, it looks like today may have started that. So let's get down to the hourly chart there. You can see that this was kind of updated throughout the week. We had this possible 5-wave move to complete. I think that was when last for maybe Tuesday or Monday or Tuesday, and we sold down nicely off that, and then we bounced to a new high again. So we're still looking for confirmation off the end of this. We're kind of one step ahead in euro dollar, meaning that we've kind of moved down more substantially to create 5 waves down off the completed 2nd wave high. But for now, you can see, if I go over that, we've got a possible 3 waves up in A, expanded flat wave B, and then we're working on 3 waves up in C. So it's a bloody horrendous mess. This wave 2 has been, and hence the reason it's been so damn hard to kind of track it. And you had these nice impulsive moves within the correction, so that kind of really kind of threw me for a loop. This was a beautiful 5-wave move down, and then we broke out. It took a while to break out to a new high, but we did break out to a new high. But those are now being clarified as C waves. So you have an internal C wave here, and this is obviously this was an internal C wave of that B wave. So got two kind of competing degrees happening there, and the intensity of the sell-off was kind of pointing to an impulse wave down, but especially when I was expecting it. But for now, we've got a sell-off off the trend channel high, so again we're looking for confirmation of an end of this correction and a new move to the downside in pound dollar, and we hope that should occur next week. If euro dollar comes along as I expect it should, well then eventually pound dollar will follow suit on that. Okay, let's get to dollar yen. We're moving up as we expected. It's been a little bit let's say surprising what's been happening this week, but it's 50-50 there for a while on whether the short-term alternate account, which would view this larger wave 2 as still unfolding. I was still kind of expecting maybe that to arise, but that didn't happen. We're moving higher against the grain, and as dollar yen tends to do, just walk its own path. And for the moment, we're kind of eyes on for a 3rd wave up. Okay, so yeah, we've got that large, you can see there, here's the weekly charts, that's that large B wave contracting triangle. Now there's another kind of alternate way of viewing this, which would allow this contracting triangle to complete, or to continue and to continue its range contraction. We shall see. I'm not going to call on that one just yet. It's a little bit early. But for now, I'm definitely gearing up for a large C wave up. That's the 4-hour chart. We've just been through that. So this is the hourly chart here. That was that alternate account there, which would view the wave 1 high at the peak of that, recovery off that flash crash low there. But I think the wave 2 low is in. We've got a break to a new high overnight and early today, so You know, sometimes you just have to believe what's in front of your eyes, and right now I think we should be moving up in wave 3, which would be wave 3 of 3. The alternate count can't really be discounted just yet, which would view this as an ongoing 3-wave pattern, and then would probably, if that was the case, if we were to fall back into wave C of 2, then we would look for a break of that 107.77 again. So it would be probably an expanded flat, so you'd be A, B, and C, like so. Yeah, so that 107.50 to 107.70 area would attract the price again. For now, you know, price is moving up. Wave count is looking for the price to move up, so I'll just go with what what my eyes are telling me. For now, that internal wave 2 here at 107.90 should hold, because wave 3 shouldn't break that previous wave 2, and we could have a series of 1-2 waves unfolding here. So we might be talking about even moving this up to 1 degree higher here throughout next week. It depends on how this kind of stepped action continues. If we get an immediate kind of acceleration higher, then I'll kind of stick with what we're at. But if we get kind of a continuous kind of stepping higher, that would indicate that we're getting a series of 1-2 waves. So we'll kind of figure that out next week. And again, this is pointing to the upside for the medium to long term, and it's pointing to the downside in euro dollar and pound dollar, and that's what I've been maintaining over the last year or two, and that's what's been happening. So, like I said, if you're calling for it and it's happening, you should just believe what's happening in front of your eyes. But I tend to even disbelieve myself. I'm so damn contrarian. God gave me a mind that was just made me hard to believe anything, even what I was telling myself. Okay, it can be a help in some ways. So let's get on to stocks. We've broken to a new high again this morning. I still think this is a 5th wave up of the 3-wave move, and I'll get into why I think that on the lower term chart. I think so. We've got this 1-2 pattern, and now a 1-2 pattern again, and this is a nice clear 3-wave pattern here in my mind, and I think this will be fully retraced over the coming months. Again, what we're looking for here is an initial impulse wave to the downside, so 5 waves down and 3 waves up to kind of confirm a turn and a completion of wave 2. But we've got, like I've been talking about over the week, we've got a series of box ticked now for this correction, and it's only a matter of days, I think, before this starts to peel off again to the downside and destroy everybody's hopes. Okay, so here's the count that I'm working on. It's an A wave up, B wave down, and then 5 waves higher in wave C. This it's hard to call this one right now. You could still count this as an ending diagonal, I think, in Dow. In the S&P has kind of evolved into a clear 5-wave pattern, but the fact that we're kind of overlapping, midterm overlaps here, and we've got a 3-wave pattern in the internal there, so I'm still thinking that it's an ending diagonal. You know, we may even have a turn before the end of the day here, and I'll be able to update you obviously on that in tonight's update. But we are, if we can go through the steps or the indicators that this is a correction, we have, let's take the height of wave A. Excuse me. And we project that off the wave B high. So we're right at those levels right now. Wave C is equal to wave A. We have a clear 3-wave pattern. We have a possible ending diagonal, which means that it's the it's the end of the trend rather than beginning of a new trend. We have price hitting the 62% retracement level. I'd like to see obviously that breakdown below that again today. If you can take that previous second wave high, we're right in the area of that previous second wave high. Everything to me is pointing to a corrective high in place pretty much right now, and I was of the same opinion right back at this previous wave 2 high when the world and its mother were bullish beyond belief. We had gapped to a new high, and then we sold off back into the space of that gap again. So if we got slightly similar action, we sell back below this previous fourth wave would be the first place to look for. That kind of 24,000, we've sold back below 24,000 again, say by the end of Monday. Then I think we'd be looking at a kind of a scenario like this again, where intensive bullishness gives way to like a collapse into a third wave. I think we're right there right now, so this is one to watch. For me, I still want to see 5 waves down, as with any Elliott wave. A point of with Elliott wave, when you're looking for a turn back down into a trend or like a pivot point, you want to see 5 waves back in the direction of the main trend. So another point to actually take into account here is this declining trend line. And that declining trend line does allow for another rally, but I don't think we'll get there, to be honest. I think we're all bought in now at this stage. I think everybody's a believer, so that's exactly when I turn to be a disbeliever. Okay, so we're looking for 5 waves down. Like I said, I was expecting this to happen this week with this kind of extended ending diagonal that just kind of dragged on. We've had no reasonable or significant sell-off over the last, let's say, since the previous wave B low. So you're talking the whole month of January. Since the 3rd, anyway. We've just rallied straight up since the 3rd, so that's 15 days straight, more or less, of a rising market. I think we'll be shocked with the sell-off that incurs after this. Okay, so that's my eyes for next week. Looking for that initial move down into a 3rd wave. Okay. And gold has kind of surprised. I was thinking that this contraction to the side. This sideways contraction, let's say, was a contracting triangle, and I was thinking that it was complete at this previous wave, this previous low here on Wednesday. But for now, we've got a spill down of a possible it's a triangle anyway. It's a B wave triangle, so we're now moving down in 5 waves down to complete this C wave. We never got a break at that 1298. So again. Still looking for wave 5 up to complete wave 3, but this is going to have to wait until next week again. I think we're probably looking at the mirror image of the stock market right here, and if a sell-off is to begin next week in the stock market, then we'll see the reverse action in gold. But for now, it looks like we've got a wave down, contracting triangle wave B, and we're working on wave C down, where the initial target would be the previous wave A. That's 1276 again, and I think the mid to high 1270s is another buying area for gold. And yeah, that's the outlook for gold next week. Let's move on to, I've forgotten the 4-hour chart there. You can see that, I should update this on the fly, and that's exactly what you should do. Counting a larger 3rd wave up. So you can see that this kind of correction in wave, that's wave 4 of 3 actually. So this sideways move here is the correction we're counting right now. We're looking for another push up in to complete wave 3, and then we'll see kind of again a kind of a stepped action in wave 4 and 5, and again another further wave 4 and 5. That's the longer term count is still pointing well higher, and I think we shall see that over the coming weeks once this corrective phase is over. It's been a bit of a pain in the neck so far, but then again, over the last year, the corrections in gold have been extended and painful, but we still rallied to new highs, so we're still looking up in gold. So crude, I'm thinking that wave 2 is in a 3-wave move, but the action in the last couple of days, well, it's been corrective to the upside, and we haven't broken to a new high, so it still qualifies as corrective. But there is also the idea that this could be wave A of 2, and then we get a larger sell-off, and again another run-up in wave sell-off in wave B, another run-up in wave C of 2. So we could be looking at a larger second wave building here. It all depends on how this interim decline breaks out. If it's a 3-wave decline to a higher low, well, then you'll see me shifting to a larger second wave pattern. We haven't had that initial sell-off. Like I was talking about during the week there, the crude seems to be tracking with the stock market quite well in this rally off the lows anyway. You can see that with the initial rally in this wave 2 happened on the exact same day that the rally in the stock market happened. So that 1,000-point rally in the stock market we saw in the Dow coincided exactly with the rally in crude oil. So these are counter trend rallies. It depends in crude how this plays out. I'm inclined to think that if we get if we get what I expect in the stock market, which would be an impulsive decline, well then the decline in crude will turn into an impulsive decline also. So then we'll probably see a long kind of drawn out decline in either wave 3 or wave C. It depends on how it kind of works out. Or sorry, this is wave 5 down, so yeah, wave 3 down. Okay, so the short-term chart. Get rid of view. That's the wave 1 low at the bottom there, and that was the rally that happened to coincide with the rally in on St. Stephen's Day or Boxing Day, whichever you want to call it. It's St. Stephen's Day here in Ireland. So that initial rally I was calling wave A. You could even call, there's a few different ways of looking at this. You could even call this wave A, B, or sorry, get rid of you. Get with it, will ya? You could go wave A, B, C of A, a little B wave there, and then this could be an extended kind of a 5-wave C wave. Like I said, we're hanging right below those resistance there today. You could call this a 3-wave move, but we're so close to resistance that it wouldn't take very much to kind of pop above that and break that to kind of invalidate this as the high. So I've kind of moved the short-term count to allow for that. But again, the same outlook applies. Looking for initial declines off the highs in an impulsive fashion to a lower high, which would indicate some sort of a wave 1 and 2 to the downside again, and that's your kind of bearish signal that would form over the high or around the high there. So that's the outlook anyway for crude, is to kind of see if we can track that top. There is obviously this previous count is now the alternate, so I'll put that in there. You see, the fact that I'm doing this so early now means I don't have the charts done, but that's life. Okay, so this is the alternate wave 2 high. So if we see this I'm enjoying this scribbling today, so I'll keep up with it. If we see this develop into a 5-wave move down, well, then we can call that the wave 2 high. But for now, I am allowing for the possibility that this is a 3-wave correction in a 4th wave, and we could possibly move up to a wave 5 to complete wave C of 2. And again, you also have that other alternate count that I mentioned on the 4-hour chart there, which could see an even larger wave 2 play out. But either way, we would expect a pretty steep decline of nearby highs. And again, we're right at that previous 4th wave again, so price has not broken out above that. It's used that as resistance so far, so it's one of those moments where you kind of just have to say, well, believe what you see. Okay, let's get into the S&P. Like I said, the S&P and stocks this morning have popped to new highs, slight new highs, but I don't think it changed the pattern really, to be honest. And I'll just go over the more or less the same kind of box ticking, let's say. I'm still counting this as a 3-wave move to the upside in wave 2. That's the previous, that's the 62% retracement there at 26.24. So we've hit the expected retracement level, let's say, between 50 and 62. We're right back at that previous 2nd wave high. Now we're in that zone. You've got a trend channel line connecting the interim highs, and we're approaching that, or we did approach that off the open this morning, and we're down off that again. The internal pattern here in wave C is wave 1, 2, 3, kind of running flat wave 4, and then 1, 2, 3, 4, 5. It's hard to know whether that's an ending diagonal or a conventional 5-wave pattern. I think this is the derivative chart here, so this chart kind of joins together the futures and the aftermarket trading of the futures and the cash. So it kind of it tends to kind of distort around kind of peaks and troughs. So on the cash chart, I know that this wave 4 does not overlap that wave 1, so it can be counted as a 5-wave pattern. But then again, you still have that kind of decidedly 3-wave looking move internally there. You could, if you were to call that wave 3 high here, and then maybe a running flat wave 4 again. But anyway, the move up in wave 5 looks to be 5 waves internally here. And let's get back to our box ticking. This is extension of wave A, so that's the Fibonacci extension of wave A. So we've reached 100%. So wave C now equals wave A. We're right in the area for a turnaround again. You know, we've got intense bullishness in the market. We've had an extended period of buying, and I think momentum has pretty much run out now at this stage. So get to the 4-hour chart there. Yeah, you can see a pretty horrible divergence here on the 4-hour chart. You've got a pretty sizable new high in the rally, and you've got a pretty sizable divergence, a bearish divergence after a double top. Also in MACD you can see that double top, and we've got a kind of this bleeding down in a bearish divergence. So you could call that a double top here as well. We got a more intensive sell-off, so we never got that kind of let's say bearish divergence happening, but it's here and it's worth looking at. It's worth taking note of. It's usually on the 4-hour chart. If it happens off an extreme high, it's worth taking note of, because these things don't usually get, or these things are let's say pretty consistent. So we've got a major bear market rally. I think it's I think it's a horrible bull trap. I think anybody who's buying in right now is going to experience the same sort of pain that they experienced if they were buying in at the wave 5 high there. So we're at a lower high, 3 waves, and I think we should be moving down into a third wave, and that's what I'll be looking for next week again. As the chart, short-term chart tells you, I'm looking for initial impulsive decline, 5 waves down, 3 waves up, lower high, kind of right-hand shoulder to set up for a third wave down. So that is the S&P done. Okay, so we have silver 4 hour here. Still looking for this wave 1 to complete, and so far we're correcting in a fourth wave, and I think we'll get a further move up into a wave 5 of 1. Again, I had thought that was a triangle wave 4 completing, but we've got 3 waves down in wave A, and then an internal triangle here, wave B, and again we're getting actually a 3 wave move down, I think, into wave C. So this would be like a combination wave with an internal triangle here. So we're right back at the previous fourth wave here, this smaller internal fourth wave, so that's 1530. So we're actually approaching that right now, so we're at 1536. So I think we should find support around the 1530 there. This final decline in wave C here looks to be, you could call it an ending diagonal. Let's see if we can kind of blow it up a second. It's hard to know. You could call that 3 waves down. Yeah, it's very hard to know. I'm just kind of thinking on the fly here at the moment. Forgive me. It's either an ending diagonal or it's a type of flat. So you'd have a 3 wave internal B wave. Maybe that's the internal B wave there. So you could have a 3, 3, and a 5 wave down in C. So it could be either flat or an ending diagonal. It's impossible for me to tell anyway right now at this moment in time. So we've got initial target there, previous fourth wave of 1530. So let's see if we get a bounce off 1530. I think this is still, in general, a kind of a buying opportunity in the precious metals. So we've got a corrective, a 3-wave correction completing in wave 4, and a new high should be should probably come our way next week. Okay, that's silver. Let's get on to the 10-year. This decline has been interesting, to say the least. We've got the decline off the high. So far it seems to have traced out a 3-wave move down, but I am looking for an extension lower into a third wave. So for now I'm calling this the wave 2 high as complete, and now we're working on a third wave down within wave 1. So let's get down here. You can see that it's a possible 5 waves move down in wave 1. It's a definite 3-wave move up into wave 2, and we've sold off that high again. So we're kind of drifting to new lows again every day over the last few days. So since the 14th, so every day since Tuesday, or we've kind of creating new lows and lower highs. So it's going the direction that I was expecting. It's not going in the manner I expected it to go. But for now, the price is declining. We were expecting a wave 1 of 3, as you can see here. I would like to see a break of support, and again a further 3-wave corrective lower high in wave 2. So then we'd be looking for a 1, 2, and then a decline down below support in wave 3 of 1. And again, this is, if I'm correct here, this is the beginning of a very large wave 3 down in the 10-year. Oh yeah, there we are. I'm done. Not so bad. Like I said, thanks so much for being with me during the week, and we'll be back Monday evening again. I wish you all a great weekend. God bless. Don't do that, I wouldn't do. And enjoy yourselves. Fresh-faced Monday morning again. Bye-bye.